Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, October 4th, 5:38 p.m. Eastern Time, coming to you from the financial capital of the South, St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we're in an uptrend. You can see the trend gauge over here. Coveted 4 green arrows means we are in growth mode. Our flagship portfolio named GROTECTION. Market's healthy. We're attempting to grow assets. Market's not healthy. We protect them. Set of rules that we discuss every night here on video. Most transparent advisor in the country. Stick with us to stay on the right side of the market. As you can see here, market leaders, green arrow, plentiful, acting well, and a great day today, outperforming the indexes. Short term, all the major indexes above their 21-day moving average. Medium term, they're all above their 50-day moving average and also above the long term 200-day moving average. So what happened today? Market keeping an eye on the non-farm payroll report that came out before the open, and more jobs added than were expected. 223,000 versus 125 expected, and that prompted a gap up. Also prompted an increase in interest rates, however, and that gap up faded shortly after the open, and we saw some volatility in the morning, but intraday, what we saw was every attempt to break down, bulls showed up. So support held. We've been talking about this key 5690 area that was the top of a support range. We stayed at the worst 13 points above that all day. So support held, put in an intraday base, and then late in the afternoon, the bulls had a stampede, closing near the highs of the day. Bears gave it an attempt this week, the last 2 3 days, trying for 3 days leading into today, trying to break things down. But that support level held. As we mentioned on the podcast today, which is available out on YouTube, uh, trying to hit break support, the more it gets tested, the weaker it gets. Like trying to karate chop a 2x4, but if you can't break the board, every time you hit it, it gets a little bit weaker. But if you can't, you give up, you walk away. The Bears couldn't break today. The Bulls held, and what can't go lower eventually goes higher. That's what we saw at the end of the day today. And that puts the Bulls in charge going into next week. No predictions. We only discuss what the market is actually doing. We don't have an opinion on what it's going to do the next day, the next week, or the next month, but we do stay in sync with it and position accordingly for our clients. Here are the numbers on the day. Nice and green. 21 over 21. Leaders really did act well today. Up an average of 1.68%, 18 up and 3 down from our 21 over 21 leaders list. Couple will be falling off. We'll talk about that toward the end of the video, but plenty ready to take their place. The Big Eight, this is the Magnificent Seven plus Netflix, up an average of 1.67%. The RG8, this is our 8 growth ETF composite. This is a verification that the pond that we fish in, leading stocks are acting well, and they did act well today. And especially we like seeing FFTY, the IBD 50 ETF, up 2.2%. The RG8 composite up 1.5%. S&P 500 gapped up 0.75%, pulled back all the way near even several times during the day, but put in that intraday base, rallied into the close, ended up 0.9%. Equal weight S&P 500 up 0.8. NASDAQ 100 gapped up 1.2%. That's where it closed, but not without some intraday volatility. Equal weight up 1.1%. Dow up 0.81. Mid caps up a little less than 1%. Russell 2000 small caps up 1.5%. Global 60/40 up 0.3%. Bonds held this back today, as I said. Interest rates popped, which means bond prices pulled back. That impacts the 40 in the 60/40, and that held back 60/40 today. Our flagship portfolio, GROTECTION, up 1.4%. Nice performance on the day. All right, let's get into some charts. And since it is Friday, I'll also piggyback the weekly chart. You can see the last approximately 3, 4 months of what's going on here. And as always, we'll start with the S&P 500. And you can see, let's go to a 30-minute chart. You can see this 5674-ish. First, let's go to a 60-minute chart because we've been talking about this range as 5650 to 5690. Let's draw a couple of lines here. There's the 5650. There's the 5690. So multiple times tested below this 5690 today. This 5650, we're going to raise the range and use 5670 as the bottom of the range now, since that held all of this week, and we haven't broken down into this 5650 level for a little more than 2 weeks. So um, raising this range by 20 points. This is what we want to hold. Still, this 5690, the top of this range. This is what we want to hold on any pullback next week, because now you can see this declining tops trend line. Yes, I drew it through the high of the day. You can draw trend lines to represent really whatever point you're trying to make, honestly. And the point I'm trying to make here is that this is a breakout above this downtrend line and this recent support. And we also held 5,700 today. So that kind of raises the bottom of the area of concern. Now setting our sights on 5767. That's the really 5765 to 67, little 2 point range there, just barely below it. That's where the bulls are setting their sights for next week. And the S&P 500, after a brutal day last Tuesday, being down almost 1%, rallied over the last few days to end up positive for the week, up 0.22%. Let's go to the NASDAQ 100. Let me just double check on a daily chart of the S&P first to make sure you can see what I'm talking about here. Another reason why we're raising that is because the 21-day moving average is now firmly above that 5650-ish level, and it'll be up near the bottom of the prior 3 days next week. So that should provide an additional level of support there. So there's your daily on the S&P 500. Let's look at the NASDAQ 100. Uh, the support area for this was right at that 21-day moving average. Now, we've been talking about this pivot of the cup and handle. That's what we've been having trouble staying above. You can see resistance broke above it. That only lasted 2 days. Couldn't get back above it. Poked back above it today, closing at 487 and 32 cents. So we're above that 485.54 range. That's the level that we want to watch for support next week. But any pullback should be held by this 21-day moving average. And this is trending higher as well. NASDAQ 100 just barely positive on the week. Dow Jones Industrial Average up 0.8% today. You can see this 42,000 level holding very nicely, including today, and close to, if not right at, all-time highs. S&P 400 mid-cap index tested the 21 yesterday, broke back above this 3,100 level yesterday, right near the top of this trading range that we've seen for the last 2+ weeks. And the Russell 2000 small cap, we've still got a kind of a declining tops trend line here, which hasn't been broken. We had one close below the 21 yesterday, but right back above it today and above this 2,200 level. We would expect that to hold on any pullback. And ideally, bulls want to see a break above that declining tops trend line. Let's look quickly at the equal weight S&P 500. Declining tops trend line break there as well after holding the 21-day moving average. Not quite an all-time high close there either. So that's the major indexes. Let's talk some inter-asset correlation. Here's the VIX. VIX hanging out near this 20 level, closed near the bottom of the range, right on the 50-day moving average and above the 21-day moving average. We want to see this, although it was down today, we want to see this get back in this 16 area. That's where the market has done its best work this whole year. How about the US dollar? We've been showing this as an area of concern because it is a change in character with us breaking above the 21-day moving average. We've had four strong closes up for the dollar. Normally, that's a headwind for stocks. These correlations change, however, frequently. And right now, it's the headwind seems to be working against precious metals, but not against stocks. Certainly not today, anyway. So although we were showing it as one of our keys, a continued move would be negative. The correlation for now seems to have changed as we're firmly above the 21-day moving average, and the dollar is up again today, but it didn't stop stocks from proceeding higher. GLD, precious metals, as I said, bit of a headwind. This is really just a kind of nice 2 week base that we're putting in here near the top of the range. For gold, down slightly today. GDX also down and closing for the second time below the 21-day moving average. Silver did manage a positive close today, however, failing a breakout above this very nice flat base that it's put in. And Bitcoin, looking at IBIT, a nice day up 2.3%. Two closes below the 21, but getting back above it again. Again, a very nice flat base that Bitcoin is putting in despite being down 5% on the week. And you can see this declining tops trend line in Bitcoin on the weekly that we're trying to break above. So since these all-time highs, Ted talked about this in detail on our podcast this week. We're making a series of lower highs. So we've got a declining tops trend line there. And believe me, you'll hear it on the news if Bitcoin breaks out above this all-time high. It's about 42 on the IBIT chart, 74,000, I think, on Bitcoin. Institutional money is involved in this now, so that makes it more important. All right, on to bonds. Here's BND. Big gap down in the price of bonds on that non-farm payroll report. Since the Fed cut interest rates, bond prices have done nothing but pull back. So they were bid up into anticipation of the cut. This was very clearly a sell the news thing, as bond prices have come back, which means yields have gone higher, despite the fact that the Fed is cutting. They can only control the long end of, or the short end of the curve. There's TLT, the broad bond index today down 0.67%. That was BND. Sorry, TLT down 1.23%, again with a gap down. And let's take a look at yields. TYX with a gap up. That's the 30-year, and TNX, the 10-year, a gap up as well. Let's take a quick look at the 5-year as well, also a move higher. So bond prices up. Bond prices down, meaning yields up. Let's go to the tail of the tape. And improvement on the stochastics with a nice move up today. We were dominating to the downside on the stochastic setup, but a bunch of hooks up on the indexes and on the RG8 haven't crossed in the most part, stopped going down and have hooked up, haven't crossed over the moving average, which is the real signal that we want to keep an eye on. As I said, the VIX down in the 19 area. NFP mentioned that today's keys. So that support level held and we're above it, and we're raising that, as I said, 56.70 now to 56.90. The cup and handle pivot on the Qs, the second key we were looking at today, got back above that. USD, the dollar above the 21. We're going to take this off the keys because it really doesn't seem to be impacting the markets. We can bring it back, of course, as we need to. So it's above, but the arrow not red, just yellow, because it didn't seem to be impacting stocks, as I mentioned. Day count from down one in a 2-day consolidation to up one, regaining above the 8-day moving average and turning the slope of the line up, 18 days above the 21-day moving average. Expectations will remain positive as long as we're above the 21-day moving average on the S&P and the NASDAQ 100. We've seen this play out multiple times with that level holding this week on any attempted pullbacks. Let's take a look at sectors now. The upside, semiconductor software led by cloud stocks, XLF led by banks, that's financials, retail up with the strong jobs report, uranium and copper as well. To the downside, anything related to impacted by interest rates had a bad day. ITB, that's home builders, we got stopped on our nail position, wrapped up the profits as our stop was hit, and also to the downside, utilities and real estate. So first change to the portfolio today, as I said, got stopped on nail, wrapped up our profits, and we added more to SSO on that move above the 8-day moving average. Net change to our adjusted beta 1.48 to 1.54. For comparison, if you're 100% in on the S&P 500, that's a 1.0. We're at a 1.54, recognizing that the wind is at our back in the market right now. Bottom line on the day, non-farm payroll gap up, but faded. But that fade was supported right where it needed to. We bounced, and the bulls took charge in the afternoon. He's looking ahead to Monday, that support level on the S&P, that cup and handle pivot on the NASDAQ 100. Let's get into some individual stock charts now. And we're going to go through the whole 21 over 21 list. You'll see which ones are being cut, and you'll see what the leaders were for today. As a reminder, uh, the green arrow on every one of these lines indicates that we do hold a position in the name. And we'll start off with MicroStrategy. This is a Bitcoin proxy up 8% on the day. Very nice performance there. We added to this yesterday. Added back to it, I should say. We stopped out about a week plus ago when it was extended to the upside, but we're able to buy that back lower today. IoT, you're going to see a lot of this as I go through here and as you look at charts, and that is a break of a declining tops trend line or handle all over the place in charts today. Really, what it means is for the last week and a half, we've been consolidating these individual names, coiling for a move higher, and we got it. You have a choice. You're either going to break down, you're going to stop going down after a nice consolidation period and go higher. And that's what we saw in IoT, and you'll see in a bunch of other charts as well, up 4% on the day. Tesla, we own this little 3-day declining tops trend line, not really back above it, as we had the disappointing reaction to the delivery news this week, but still at the 250 level, putting in a handle below this pivot. CEG, we own this as well. This is even stronger. Broke the declining tops trend line yesterday, powered through higher today, up 11% on the week. VRT, this is showing as a cup and handle, but really a little declining tops trend line there. And this is identifying relative strength. This broke on Wednesday, made a higher high Thursday, and another higher high today. And note the relative strength line up 7% on the week. Oracle, we own this too. This is still consolidating in a nice tight range here, but now at the top of the range, not really showing relative strength, but not breaking down, going sideways after this earnings gap higher. Palantir, don't own this, but this broke out yesterday and went higher today. DoorDash, don't own this either. Again, there's a declining tops trend line breakout. Uber, also declining tops trend line breakout. We do own this back above the 21-day moving average. Sprouts, don't own this, higher high. NVIDIA, our largest position, failed breakout last week, right back challenging that level again, up 3% on the week, up 1.7% today. Axon making higher highs. Java, here's the declining tops trend line break above. We own this. Flutter, declining tops trend line break above. We own this. Guidewire, this is very healthy. You can see no consolidation whatsoever, just riding this 8 EMA higher since their earnings report. The SE, little 3-day declining tops trend line up on the day, just bouncing off the 8 EMA. Good strength there. F5, not quite broken, maybe barely the declining tops trend line there, but up 1% today. Uh, Shark Ninja undercut the eight yesterday, higher high today. Sorry, that was Wednesday at undercut. PDBC and FTGC, these are two that we're monitoring as possible commodities play entries. Those are nice looking charts, not really in the 21 over 21 though. Here's Zillow made an attempt to break the declining tops trend line, but a true headwind today with the rise in interest rates on anything housing related, down 1.55% and down 4% for the week. Just consolidating this very strong upline or uptrend on a breakout of this cup and handle that happened 3 weeks ago. First Solar. So this is coming off the 21 over 21 list because, well, that's three closes below the 21 now. They had some tariff news. We got stopped out of our position, and this stock is tough to hold at times. So this will be coming off. ITB will also be coming off, break below the 21 day. And that's it. So those two are coming off. We'll have two new names, at least two new names. We'll evaluate all things for relative strength and some of the contenders to get back on our 21-21 list. So join me on Monday. Also, our podcast is out on YouTube now. If you're on the email list, you'll get an alert tomorrow. And Ted and or Connor will have the weekend walkthrough on Sunday, keeping you in step with the market. That's what we do at Revere. Revere. Dan went through some Revere poetry in the podcast. And basically what Paul Revere, as you know, alerted the colonials when the British were coming. We alert when bear markets are coming. Not happening right now. That's why our flagship portfolio is named GROTECTION, because we grow assets during uptrends, protect them during pullbacks, get really defensive during downtrends. And if you break this 21-day moving average, or sorry, 200-day moving average, this black line, we will be completely out of the way because this is where all bear markets occur. You might have people saying, oh, that's just a chance to buy cheaper. Okay. Well, once you break it, maybe you get back above it, or maybe you get a 25, 30, 35, 40 or more percent breakdown. And we're not going to deal with that. We'll wait for better times in the market to be participating, but don't have to worry about that right now as we're in an uptrend with the bulls in control. And as always, we'd like to hear from you. You can email me, don@revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. Email Dan if you're interested, Dan at Revere Asset if you're interested in becoming a client. I already gave you the GROTECTION spiel, and so I am going to wrap it for the week ending October 4th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend.